factors when you want to understand the trend of an area. Basically, the demographics, meaning the actual who is where, how much. I mean, are you gonna go high end or low end? Okay, if you're in Flower Mound, Texas, you're in Beverly Hills, California, you're in, Fort Lauderdale, closer to the intracoastal, you're gonna be looking for higher income people. You want higher end homes, etc. But if you're in an area where average income is less than 50,000, you're going to be looking to build maybe a commercial like Dollar Tree or something like this. Or if you do residential, you want something smaller, 3-bedroom, 2 bathrooms, etc. So the demographics, because it has to do with population and population growth, you're going to understand the growth. Now, the other thing that ties to all this is jobs. The job growth. Are there big companies coming? Are there big companies leaving? Columbus, Ohio has, north of it, Intel coming in, and they're investing in some big development, $800 million. Imagine the growth. It's crazy. Land are going to triple. Talk about gentrification and craziness going on in that area. It's going to be crazy. You can either complain about it or you can take it to your advantage. How do you position yourself? So you look for job growth, population growth. You look for the demographics of that specific area. Now, overall, the macro view of it, now not the micro view, is what's going to happen with the interest rates. I mean, Trump took office, he's going to take office. Powell came in and the Fed chairman and is dropping interest rate, but actually you can see that it's just actually has not changed much. Actually, it's at about 7% right now. It was 6.8. It's just like interest rate is not helping people grow as much as before, but actually prices have dropped, but the cost of construction has increased. So everybody's getting squeezed in real estate. So be smart, get something below current market, work on it, understanding that there will be a little trend, some companies coming, some good growth, and it seems like the trend is going to go down on the interest rate, so you may benefit with that. And this is what you look for: job and population growth, interest rates, economic conditions, which has to do with like what's happening with the employment and who's coming in and real estate demand, demographics, the government, local government policies more important than overall policies of interest rates, and then supply and demand in that particular area, which I just covered in the previous question. Supply and demand is very important, because if there is a lot of supply and no demand, you're cooked, you're finished. But if there is a lot of demand and little supply, oh my God, I remember that. I remember in 1998, there was so much demand in the city of San Jose and no supply, and San Francisco, the entire Bay Area. I could buy anything, put it for sale. Before I close on it, I already had lined up a buyer. So you play the market at hand. If it's going up, flat, down, you want to catch it below and sell, below and sell, and below and sell. And if you're in and out and you know what you're doing, since you want to evaluate the growth of these markets and understand what to do and the factors,